What is going on, everybody? And in this video, we're providing a state of the market and stock picks for March 10th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, would you look at that? Looks like reality is finally setting in for the market. Now, the biggest thing that started us off today was the jobless claims. They came in a lot higher than anticipated. But this is something that we've talked about before, and essentially that being that the jobless claims and non-farms have been way off, essentially point. So the initial jobless claims came in at 211K versus the 190K previously, and then essentially was forecasted at 192. So a lot of the different, which leads us to believe that coming into tomorrow with the non-farms, are we going to get some crazy unexpected number that's going to show us that everything is okay? And this is where the panic sets in: is the disconnect between jobless claims and non-farms. And so with that being said, things are going to potentially start really downtrending from this point. Non-farms tomorrow, again, if that report is hot, that's going to add more fuel to the downside, as Powell has already iterated that a 50-point basis move is pretty much where we're going to be heading in the next monetary policy. The odds of that have highly increased. Now we are waiting to see what the report is to really determine what the odds will be for a 75-point basis move. Again, now they're kind of predicting us to be at the 6.25 by essentially September. So that's what they are expecting. We shall see what happens, but again, if inflation starts getting out of control, which I'm expecting on the next core, the following core after that is going to be very, very critical, as it could essentially cause the Fed to keep raising rates at a high, essentially more frequently, or even at a higher point percentage. So we definitely have to see if that's the case or not. But nonetheless, this is something we had anticipated. We were just waiting. Today, aside from the jobless claims, there's been a lot of banks that have been going under. I know SI is essentially having to cough up billions of dollars. And something that came out too, that kind of highlighted over the past post Powell testimony, was essentially John Kennedy came on, senator, I believe is from Louisiana. But he came on and essentially told Powell, essentially, if you go by the history of the way of what's currently going on with rate increases, that the pace in which Powell is increasing rates would essentially put the unemployment rate at 10.6 to get to a 2% inflation rate. 10.6. We are only currently sitting at 3.5. So that's just putting things in perspective. If the Fed continue to do what they're doing, there is going to be a lot of unemployed individuals. But with that also being said, he said at some point that Congress needs to step in and handle some of the grunt of that, of what Powell's having to deal with. Powell's going to do his job, but Congress needs to step in. And so that was really his point being there, that if Congress doesn't do anything, it's going to be up to Powell. And if you leave it up to Powell, then it's going to, if we continue along this journey, it could be up to 10.6, which is absolutely crazy to think about. But if you think about essentially the amount of money that's been printed, you're living through a very historical time where 40% of the money supply hasn't been printed. So you are going to go through a very crazy period of time, which you haven't seen in history. There's a lot of different times where you've seen particular instances, but again, you are dealing with a new aspect, a new dimension to what is currently going on. And so whatever you're dealing with is going to accelerate what has happened. And so it make moves a lot bigger because there was so much money being printed, and now you're having to cipher that out. And what the problem being is Powell is trying to siphon that's the money back out of the market, but he's having a hell of a time doing it. And so again, with everything currently going on, we have to see today was just the start. If non-farms again are strong, there is going to be a huge downside tomorrow, because that's just going to lead more into a 50-point basis move, and then our projections for everything are going to start getting worse. And that's the concern, is when they start predicting what's going to happen the next couple of months. Again, we're going to be stuck in that level 1 for a while at this point, the way things are going. And that wasn't what the market was expecting. And this is why the fear is going to start coming in. And so cascading events is what's causing this to start playing out. The reality of the situation is sitting in. I said March was going to be a very bloody month. We're starting to see that. I think tomorrow will be a continuation of that. And then we will, at some point, maybe relief bounce next week going into the core. The core is on the 14th. So the core is next Tuesday, I believe. Let me double check. So the core is, let me double check. Yeah, the core is next Tuesday. So Tuesday at 7:30 a.m. Eastern Standard Time, you're going to get the new core inflation report. And again, if that is bad, this thing is going to lose legs and it's going to fall. I can see where this could be the accelerator to the downside, and then whatever comes of the 50-point basis move. I think at that point, if we have a really high core, and if we have a really strong jobs report, I think the market will just start selling at that point, and then it won't really matter what's going to happen with Powell and the monetary policy, because people know it's going to be bad. So again, we have to see where we fall, and wherever we fall by next Thursday, roughly a week from now, is essentially where we're going to have to wait. I think we're going to hover around there until we figure out. The market's going to have to adjust what could potentially be happening, and then you're going to get your final move with monetary policy. And again, if that's 50, again, if the core is high, right, you could even potentially say, well, maybe a 75-point basis move. I know seems a bit absurd, but really highly dependent on what comes out of that core. Again, things are really, really bad, and there's a huge disconnect, again, with jobless claim or unemployment numbers, and essentially our jobless claims, and essentially with what's going on in non-farms. And again, I think it's highly because of the fact that non-farms, you've got people working multiple jobs to keep up with inflation. And so again, you don't want inflation running away. Powell doesn't care about anything else. Powell doesn't care about employment. Powell doesn't care about where the dollar is. Powell cares about getting inflation under control. And if Congress isn't going to help, he will do it himself. And he's made that very well clear. It's not his essentially boundary to step in and talk about policies. So with that being said, if Congress won't do anything, he has no other choice but to lay on rates. I do give it to Powell. I give nobody else would want that position. That's the extremely stressful position, and he's handling it very well. Being said, everybody has their pros and cons for everybody, but I mean, who else better than him as of right now? He's been pretty transparent. He's not always been great at times, but I mean, he's been transparent. He's talked about this and being very data dependent on every policy he's come out on. He has said that, and he's reiterated that over and over. Yes, he's messed up and said disinflation. That was a bad thing to say. The market pumped off that, and now people are paying for it, and it will continue to be that way. This is probably one of the very few and only times cash is king, because you have to wait for this to play out. And then when it plays out, you see a bottom at that point, and then you take position from that point. So with that being said, tomorrow is going to be a big day, a very big day. And again, that non-farms come out at 8:30. Let me just double check. I think it's 8:30 Eastern Standard Time. Yes, non-farms come out at 8:30 Eastern Standard Time. So that'll be come out. We have to see too, because they're still trying to revise a lot of reports. If there's any reports that are giving sticker shock, they are revising them to try to essentially soften that blow. But nonetheless, there's only so much softening you can do before real numbers come out, and then that's where it gets aggressive and the market starts selling off. And that's what my concern was leading up to this point. It's March Madness. This is a normal down cycle. Of course, it's going to sell. We just needed to wait for it to happen. And again, there's no way of knowing what event it's going to be that's going to cause it. You just have to be patient, and then it happens. And that's what we're seeing, and that's what we saw today. Again, there wasn't any real shocking new news in the headlines, but the market just started selling. Again, the job just came in anticipation for tomorrow. Very well could be. Again, if we have a hot report, again, who knows where it would be. Like I said, I called this out in the beginning of the week, was 3,800 is where I potentially saw us going. And that's going into the core. I think by tomorrow, if we get a hot report, we'll be seeing at 3,800 tomorrow. And again, if we get a really bad report in the core, that could potentially lead us to a new low. And then we would see us potentially gapping all the way down, or not gapping down, but I mean, it would take probably a day or two to get back down to the 3,600 and start testing this whole level here. So that's the concern. Again, very misleading. I talked about this. This point from this, I remember when this happened was right after Powell. The market just sold off, and then institutions came and bought in and pushed it up. When we went through earnings and all that, high point of 2023 is right here. And the banks called it out. Michael Burry also called it out, saying sell right around this area. I'm not sure if that was a type he called, but he called it right around this zone right here, around the 4,100. Also, the bank CEOs told you that was a high point. It's funny how Michael Burry and the banks all came out at one time and kind of all just let that message go. Of course, it took some time for that to play out, and then now we're seeing that, and then now everything's going to line up. Again, I've talked about this through this whole pump, that you have to be very careful, because this is a very manipulated pump, and that's exactly what's happening with the massive blow we had today, and then potentially tomorrow, and then potentially again on Tuesday with the core. And again, I think that core is going to be bad because of that 25-point basis move. And if even Powell is saying that it was a mistake, I think you're going to see that mistake on Tuesday. So with that being said, again, looking tomorrow, if the bank, or if this does pump for whatever reason, I think at this point, with the anticipation of what's going on with the core, we may pump up some. We'll see how we land tomorrow. It may try to push up just as a relief, dead cat bounce, and then that might be the final blow where it drops. Again, you're going to get the cross right here. Something I don't really go off the cross, but or whatever it's crossed when the 50 and the 20 cross. You're going to get that move tomorrow. The next daily that opens, you might get a little bit of a pump up, but it's going to hit that, and then we're going to drop. And then, like I said, I think by Tuesday, we'll be at 3,800. And then depending what comes of the core, again, if it's super hot, we're going to take out 3,800, and then we'll see if we drop back down and retest 3,600. But again, things are bad, and they're going to continue to be bad. And then you got earnings right after monetary policy. It's going to show some really bad numbers. There's been continued layoffs. A lot of banks are essentially, going under, and they're losing tons of money. Banks are restricting credit cards and removing some limits on credit cards. These are all things that we've seen way before this happened. So I talk about the reality of what's going on compared to what is being displayed, and you can't go off of just normal data. You have to look outside of that, and it takes a while to kind of understand what everything else is going on. But you could see it in the price action as well. I mean, this is why I go off price action. As of right now, it's been inflated because of what's currently going on, right? And there was a disconnect. Whenever you get a disconnect of the strength in the market with the reality, that means it's only a matter of time before it flushes. And that's what I've been seeing for the past couple of months. Yes, it's taken a while. I'm not saying you can't take advantage of the pumps. I took advantage of the pumps a couple different times, but ultimately, it was ready to come. You're just waiting for that delayed reaction to happen. Now we'll see the impact it has in the next coming months and how big of an impact. But if we can be patient and let this thing write it down, um, it could be very beneficial nonetheless. So we shall see. Again, this is not financial advice. So yeah, we'll see tomorrow. Again, if we want to try to attempt to retest the 39.44 tomorrow, could be a possibility. If this thing does bounce at all, there may not be a lot of strength in it. We have to really, this is why I talk about price action. We have to see what kind of bounce we get out of roughly this 3,900 tomorrow, or if we drop below 30. If we drop below 3,900, I think that's just a straight calling for, or we're going to scream straight to 3,800 at that point. And it may very well happen if we get a really hot jobs report, and then having that disconnect between unemployment and non-farm. So again, things are set it up really, really bad for this thing to end not good at all. So just be mindful of that, and we will wait and see. The dollar, of course, is holding that 105.2. So you get the break, the retest. Now we run tomorrow. The question is, do we run? It's pulled back. This is what is quite unique. But as you can see here, going off of candle bodies, you can't go off of wicks. So going off of candle bodies, that's your support roughly at the 105.11 here. So we see tomorrow if this thing rockets up, and I expect this thing to rocket up, especially when you get this turn of the 20 and the 50, what I just talked about. When you saw the reverse on the SPX, that means this thing's going to go screaming up. And again, same thing with SPX. You might get it. You're going to get a retest like this on SPX, like I just talked about. You got these turning over, so that you're going to have this. We're going to see what kind of strength it gets to push up into here, and then it's going to turn over and just start, and then you're going to get another massive candle down. As the same with the dollar, you're seeing the same thing. You get a break, an official break from this candle body, and you got a break above the retest, and then potential rocket straight up. So that's what we are watching. You're seeing that on Bitcoin as well. Huge dump. Again, we have not seen the bottom. The bottom is yet to be in yet. But like I said, depending on how nasty this gets, that could be the bottom. And so that's what I'm waiting for. And that's what I would call the bottom, when you get essentially a full breakdown of everything. And then we go from there. And again, the stock market will recover quicker than the economy will. So just be mindful of that. But Bitcoin doing the same thing, looking for another push up, just like the market retest. You'll get the cross and then the drop. So we may have one day where we kind of maybe push up and sit flat. If the market hits expectations, I could see that, and then we get a very strong rollover on what happens with core. If core comes in really bad, that could be the knife that just sinks this thing back down to 16, and then potentially break and make a new low. So this is what we've been talking about this whole time. It's finally playing out. It took a little bit of time, and you're seeing that in Tesla right here. Actually caught part of this right here as I saw this break and retest. This is the first retest, so this move will be smaller, but the move you're really looking for is when it bounces and comes back into that retest of the 2050 or the 20 and the 50 cross. That is when you enter for short position. Again, not financial advice, but that is when you enter a short position, and that is when you'll get a huge move. These are small moves compared to what's going to happen, in my opinion. Again, if the news aligns with everything, this is why you pay attention to the news events, because they align up with this. And if that news event, if that core is really bad and it lines up with this, you're going to get a huge move to the downside. And that's what I look for. Those are the patterns I look for when I play for the downside. But and I saw this a lot when I was going through the pandemic and watching the limits down every day. You see them the same exact move. You get a break, you get this short retest, and then the little mini drop, and then you'll get a hook right back to retest that, and then that's the death blow, and this thing just rolls over. And so that's what I'm looking for, and we'll see how that plays. So Tesla, again, aiming 140. These bigger candles today, I think you're going to get quite a bit of fuel coming into this thing. And again, I talked about this gap. There's going to be a huge drop on Tesla, at least down to 140. And then again, if this thing continues to play out the way I'm thinking it's going to with core, you're going to get a new low. This thing is going to, obviously, when it hits the 101, you're going to get a bounce. but then you're going to get another rollover and retest and try to break and go lower. Again, Aldi playing on how these series of events will play out. This is why you have to be patient about the series of events that are playing out. And if they go in your favor to the downside, then again, that's more fuel. Right now, the fuel has started. The wheels are turning. I said this would start with Powell, and then that's all it took. Powell presented the sticker shock on Tuesday, and then we got the non-farms, and then we got the core, and then to finish it off, we have, again, monetary policy. And again, it's really going to be highly dependent on that core. And again, I think that core is going to be really high, much higher than anticipated. And so, and again, Powell's kind of reiterated that already in his testimony. So just be mindful of that. NVIDIA, another big one. That's what I talked about. This is one I want to get on the way down. Again, right now it's ran quite a bit, so you kind of want to let this thing die off. But I like the aspect of NVIDIA essentially in the support it has for ChatGPT, and I am very much about AI and how it could potentially help us get out of the current situation that we're in. Obviously, it's going to take time. I think a year from now, we'll be in a much better state. Right now, we need this to happen. We need more normalization. We need a bigger essential drop, and for the price gouging to stop for this to happen. And right now you're not getting that. You're still seeing huge price gouging, and people are starting to get the realization that it's not going to happen, right? Like, you can't sell your house for 3 times as much as it was, and you're still seeing that right now. So until that dies down, again, the housing industry is a much delayed reaction, so just be mindful of that. And so we wait and we see here. But NVIDIA, again, I think it's just starting to sell. You really want this thing to break the 225. If it can break and retest, that would really be your entry for NVIDIA. Of course, it's about almost a halfway point on this gap fill right here. But if NVIDIA does open below the 232, could see this thing just straight butter this 20 and then start going down. Again, you want to look for, if you really want a great short, you kind of really wait for this thing to kind of butter through this and then look for that cross in that retest and drop like you're seeing in SPX. And in the dollar obviously is inverted because the dollar is going to go to the upside. So kind of really watching that. BA finally seeing weakness. It took forever for this thing to break down. And it's finally breaking below the 50. So BA, you look for a retest of essentially the 204. And then huge rollover to the 200. Again, you'll get a big bounce off the 200 support. Again, what is fueling it will determine if it can roll over into straight butter through the 200. Typically, the momentum right now is going to be strong, so I don't really know how well this 200 is going to hold. Typically, you can get a pretty decent bounce off this thing, but if the market wants to really start sending down, which we noticed in the last time I really started caving when I was talking about this, and it happened, the most hated rally last year was 680 points and then dive 830 points. I kept reiterating this. You can go back to my videos and see that. It's exactly what I talked about. And what we could potentially see here is another 230 point, 900 point to the downside from where we're currently sitting from the high point of this previous rally. So we see from this point, JPM, this was a telltale sign when you had a huge break of the bank. We've been waiting for this thing to break, and it broke below the 200 moving average. As long as this thing can stay below essentially the 133 tomorrow, there's going to be bigger downside. This is just the beginning. Look at this gap. I've been talking about this and highlighting this for such a long time. This is not good. Because if this opens below this tomorrow, that means you're going to have a huge drop to 177 potentially tomorrow. Or maybe we hover around here for Friday, Monday, say, oh, maybe we have some hope. And then the death blow comes with core. And then that's the thing that tips us over and makes the huge drop in banks. And again, banks will lead the way. If the market's going to start selling, banks will lead the way. The market really started selling today. It's funny because this right here started it. JPM with a huge bad day. And now Goldman Sachs is starting to break support. Bank of America, Bank of America really started selling too. Broke support here. and you're going to see a new low, right? This is the bottom here, roughly 129. This thing's going to get smoked. And then you got earnings for Bank of America on April 18th. So we're roughly just over a month before we start getting banks, and that's going to be nasty. Is that going to be another? This is why I talked about this cascading effect, and I knew it was going to start with Powell. I've been talking about this for a while. I knew it was going to start with Powell. Powell would bring the sticker shop on the mess up that they had, and then everything else would start cascading, and then bad earnings on top of that, and that's going to sell the market off more. And so, and also we'll see if there's any black swans that happen, right? If there's a black swan that occurs, I mean, you're kind of already getting at a lot of the banking side of everything. Is a lot of these things are going belly up, and they're causing these huge sell-offs. Right, and banks are defaulting. Right, there's everything. There's so much defaulting. People are defaulting on their credit cards and their automobile. That's the biggest thing. Is everything is starting to cascade. Now you're getting the snowball effect. The question is where do you land? Because now you got a bunch of stuff. You try to cover it up, and now you got a huge snowball that's starting to gain momentum. And that's the problem. Is you don't know when it's going to stop. And so again, be patient. Let this thing sink in a couple days. Let the core happen. The core is bad. Let that sink in for a couple days. See where we are, right? You don't want to be just snatching stuff up and think this thing is going to just recover quickly, especially after what's happening and what could potentially play out. This thing can continue to sell off. And I projected this beginning of the, I think it was the beginning of the year, roughly around there, that we would roughly hit around 3,200 is where we're going to land. And so if we can even jump back to SPX here, right, 3,200. We got a long way to go. We got a long way. If I'm thinking 3,200 right here, we'll even mark it on here. We will show the price, and we will put 3,200. And so that's my money mark right there. We'll even put a dollar sign in here. That's where my target is. I think that's where we're going to hit. At the bottom of this thing is 3,200. We will see if that happens. But I talked about this as we were making this push up. I said, no, I think 3,200 still. And this is when we started roughly around here is when we started getting predictions about how the year was going to end really bad. And then we got the final push up. And then now everything's sinking down with 3,200. So that's a massive drop from even where we were at before. And now that we've gained all this steam with this fake hopium, and now we're going to pay for it. And that's exactly what this is, because now we're going to get the realization of everything that's actually occurring. But the thing is once you get down here, you might get one of these initial spikes. You might get a pump like this, to be honest. You might hit this, maybe do a small recovery, and then a retest, and then maybe pop up. But again, I'm aiming for 32. Again, at some point here, once we start making a new low, this is always a good rule too, is once you start making a new low, that's pretty much the point in which you could, again, on financial advice, but could start DCAing once we hit or break below that 3,500. You start DCAing at that point, and then whatever stocks you're looking at, and then if we fall further, you just keep DCAing, and then you wait for the recovery at that point. And like I said, I think by potentially July, maybe this snowball will stop by July. Really just depends on how quick we go down. If we go down quickly, then that may not be the case. We may actually stop and consolidate a little bit and try to recover from that point. So there's no way of really knowing. And this is why I keep trying to reiterate that only time will tell. But again, there's still a bigger move that needed to happen. The realization of everything needed to hit before I was comfortable feeling we could go long, and that would be it. So again, we never know. I mean, this thing could recover and just start running back to all-time highs, because that's the way the market works. Nonetheless, appreciate you if you've made it this far. Go ahead and drop a thumbs up and comments, like, retweets, get your friends to subscribe. Anybody out there, make a double account, whatever. Subscribe again. Nonetheless, have a great day. I'll see you guys on the field.